Hope everyone's having a nice weekend. This is Koosh doing a weekend market update. Gonna do a little different style of an update this weekend, more focused on some big picture signals I've been sharing with the subs and the members. Um, and I'm gonna give everyone a taste of, and this is something been posting on my X account for years now. One of the fundamental cycle premises here is what's going on with global money supply. And if we just, so this is a monthly chart. This is the aggregate of the largest M2's money supplies in the world, accounted for the exchange rate. And let's just go all the way to the left of this chart here where I'm pointing, okay, pointing here, where this chart basically starts December of 2017. Where what happened in December of 2017 with Bitcoin? Parabolic blow off top. What happened with from that point, if we look forward 2 years, basically global money supply downtrend, consolidation prior to this channel it worked its way out of, and then it kind of went parabolic here. COVID was the impetus for this entire thing to go parabolic. Uh, the timeline or the event was the impetus, not a large coincidence there, huh? Where all of a sudden the printers went berserk, and that was March 2020. Risk assets exploded, Bitcoin, Nasdaq, everything. But mind you, this was a volatile event, right? We had some things that were down 20, 30, 40, 50% in a matter of weeks prior to making this run. Okay. And we shouldn't always expect a one-to-one correlation with, well, what do I mean by that? Let's just say tomorrow we wake up and this is like boom, something happens. I mean, something major would have to happen, right? This would be a news event, news driven event. And you just saw some major spike in global money printing. I would expect maybe that news event that would cause that would cause the opposite thing to happen in risk assets initially. Just a major volatile event, and then the risk assets uh, stabilize and then recover. Why is that? Because this stuff isn't a one-to-one. That'd be my expectation. I could be wrong. I mean, why is that my expectation? Because the same thing happened last time, right? Kind of a low IQ thing to say, but that's kind of how the market has conditioned all of us. Is when this started going parabolic, we saw some volatility. I think there's some evidence in some of the videos I've been presenting for the members that that's been ongoing in the form of a different type of capitulation under the hood. That's just taking a different shape. Yet the feeling that's exuded on the market participants is the same in aggregate. If you look at the number of days we've been, and I'm going to present a unique view at that next. Um, but but I digress a little bit there. So the point is like you fill the top of the champagne pyramid with champagne, and is this glass down here going to get filled right away? No, it takes a little while, right? Trickle down, trickle down, trickle down, trickle down, trickle down, trickle down, and then this bottom row gets filled. Same kind of concept. That's an analogy I can use here. Is it's not always a one-to-one or a day-to-day or a month-to-month. In fact, what do we see here in September of 2024, where global money printing hit an all-time high? Where was Bitcoin then? Where was Bitcoin? Bitcoin the prior month had tested 48K and had just been kind of coming out of this thing slowly and slowly. And as money supply went down 1, 2, 3 months into December, what did Bitcoin do? It did the opposite. It doubled. Okay. So the stuff isn't a one-to-one. That's the whole point here. People that look to get in and out of positions based on what they see in a chart at a time are gonna be very frustrated because these things move in different waves and cycles, and it just doesn't work that way. But the point here is today where are we with this chart after global liquidity or money supply just exploded in March 2022? It peaked. This is kind of where the downtrend started. Where did Bitcoin peak? Right here, right? So 1, 2, 3, 4 months before it anticipated this downturn consolidation. It's smarter than everything, including myself. And it truly hit. I mean, I've been claiming this was kind of a bear market rally, B wave. It really peaked, in my view, much sooner. March, April. So 13 months before the global money supply did. Long story short, what did we see after we saw consolidation? This consolidation, I first posted this chart in October 2023 saying, Bitcoin was going to sniff out what's going on here. This just looked like a massive reaccumulation in this very similar form that we saw before. Yeah, I'm doing TA on global money. And then was looking to break out. And that's what's happened. And that's what's happened. And Bitcoin sniffed it out. Back October, I think Bitcoin was, what was it here? Let's look. What was Bitcoin there? October was $27,000. $27,000. Okay. So the thought where I made that initial post was Bitcoin's telling us what's happening with the money printers, whether it's overt or covert. It ended up kind of being covert, right? It wasn't something that people were sniffing out, and we weren't seeing things in the news about money printing, but money printing has been going on, and it's been going on for the better part of 2 years, and it just looks to be accelerating. It just looks to be accelerating to me. Very similar to this pattern. It doesn't mean that tomorrow Bitcoin is going to explode to 300K, right? Patience is going to be required here. But I still think this looks like a new uptrend, and that's the focus. Nasdaq next. We do not see, we just don't see evidence for continued major downturn in the markets right now. We don't. I mean, at a minimum, one could make a case for a counter trend rally, but even then, there tells that it's a counter trend rally. What do I mean by that? I've got fear and greed indicator at the bottom, okay? Fear and greed. And I've got the Nasdaq here all the way back to March 2020. And let me highlight a couple things here. There are a set of circumstances that precede, on average, 24% rallies in the Nasdaq since 2020. And I'm not including the 84% rally off the lows before consolidation from March 2020. I'm excluding that because that's an outlier. I'm just talking about the 1, 2, 3, 4, 5 instances prior, excluding that, where we met a certain level on fear and greed. And what's that level? It's the white line here, okay? That's the white line. This is the fear and greed indicator. And when we get down to this level is what I'm looking to measure. I'm looking to measure how long it's down here and a set of circumstances that we're in right now, basically. And what typically happens, what's the major move after these things happen? That's what I'm looking to analyze. Posted this for my Twitter X subscribers, I think yesterday. Let me go days, number of days. Okay. So 42 days there. 60 days there. I mean, these are not unusual occurrences. 98 days there. 63 days there. 63 days there. And where are we now? 70 days. So we're in the wheelhouse. We're in the wheelhouse. What were these what were the rallies that came? Now, this doesn't mean the bottom is in. This does not mean the bottom is in. I think we're getting one more move down. I'm going to be posting a little bit more detail surrounding that in the group video later. But the gist is this for all of us that are just kind of holding and not trying to move in and out of these things. Once the low is found, 16% rally, 24% rally, 30% rally, 22% rally, 26% rally. Okay. This time is not different, in my opinion. This time is not different. I'm expecting a 24% rally from wherever the lows are found. Moving forward into the summer. I do not believe this time is any different, and I'm presenting more data here to illustrate that. Now, how can we call for a top when there is no evidence for a top? Where was there evidence for a trend change in this chart? Well, I've got it labeled. Here's the evidence. We want to start talking trend. I'm happy to start talking about a trend change and a bear market and a prolonged correction, but we need to see evidence, and there isn't any evidence. What was the evidence for it back here? Here's our 30-week, okay? Here's our break, here's the change of character, okay? So breach of those lows, we're into the cloud. We come back up, make a lower high, reject off the 30, we're back in the cloud, and we have a break of structure, okay? There you go. That's what we'd need to see on a high time frame. Let's superimpose that to what we're seeing today. For now, we've got macro, higher low, higher low, higher high, higher high, higher low. And so what's the 30-week doing? We're under it right now, but here's what I'd need to see. Here's what I'd need to see. I'd need to see, something like this, okay? That's what we need to see to say there's evidence in the chart for a trend change. Right now, there is no evidence. So any calls of tops or anything of that nature is speculation. You're saying, I'm expecting to see this occur when everybody else is expecting to see it to occur, which if you'll notice, what's interesting here is what were the fear and greed readings back when this transpired? They didn't hit the levels that we're at now and didn't hit the levels that preceded any of the major rallies before. Very interesting. Isn't that very interesting that the market makers disguised this trend change such that the level of fear that it instilled in the marketplace was less than every other instance that I'm sharing here with you. The one instance where it actually resulted in a trend change was the instance where people weren't scared. Fascinating. I just realized that as I'm presenting, I'm doing this chart. Fascinating. Let's go to the overall Bitcoin count. So the revised Bitcoin count, this is a count that I had from the summer. I thought, full transparency, I thought we kind of we were coming out of this. I was not expecting these lows. I was expecting from this consolidation to move to 140 plus. Although I did had the scenario from the summer where I saw major 1-2 or minor 1-2 of this major fifth coming back to these levels. And I talked about, as soon as we breach this range low, then I can entertain that. And we breached the range low, and so now I'm entertaining it. Does it stop here? I don't think so. I think given what we're doing with the 30-week right now, whether we retest the lows or breach it, I don't know, but that has to be in the cards. especially with the way I'm looking at potentially one more low in the markets. I'm fully prepared for another test of these lows. A breach, I don't know. I don't know. I suppose we could get to the low 74, 75. But that's not my concern. My concern when I'm looking at this long-term chart is what I think the next major move is, and that's here. That's here. I'm expecting an extended fifth wave, and so that lines up with what we're seeing here with a two sentiment. Some of the alts have taken major cuts, haircuts, and some of them have round tripped the entire Trump pump, which you'd see in a 1, 2. With two bottoms is very common to retest the area of these previous lows and retrace almost all of that pump. That's where they're most common. So that lines up with the overall two here. I've going to do a group video for Doge and XRP, and I've redone the count on Doge, but it very much aligns with this thought here as well. So that's the look on Bitcoin. Nothing but maximum bullish in this range. There's nothing but maximum bullish in that range. That's it. That's the philosophy. It's the same philosophy as here. It's the same philosophy as here. And let me throw up the cloud. Even more space above the cloud than we had here. We touched the cloud. We were in the cloud here. So technically, this just continues to be stronger than even our last two major pullbacks. I think that's the video, folks. I'll get into some more detail on some low time frame stuff with the groups. Otherwise, have a great rest of your weekend and take care.